Welcome back. You're watching The Money Show on ET Now. Market swings have been wild and a lot of investors have been wondering what to do. Is this the right time to increase your SIP? Should you pause your SIP? Amongst many other questions, especially if you're directly invested in the equity markets. Well, to give you advice, today, earlier in the day, we caught up with a whole host of market stalwarts. Now, Raamdeo Agrawal of Motilal Oswal advises investors to gradually nibble in via SIPs. So basically, don't stop your SIPs is his word of advice. He also acknowledges that this route, of course, is the kinds that he has never seen before, but stated that the underlying values of the big companies will prevail again. We also spoke to Sandeep Tandon, meantime, of Quant Group, on what strategy an equity investor should adopt. Listen in to these conversations.
The valuation check or value check remains still same, because post coronavirus we are not thinking that it's a different world, different theories will come, different way of understanding will come. Again, the present value of future cash flows are the is the foundation of value. So that doesn't change. And I also don't think that fundamentally economics or the company's long-term future is impacted. Probably even 2022 onwards, EPS is also not impacted, and hence I think whatever was the assessed value, say a month back and today, would not be significantly different from most of the companies. Some companies which are weak and somehow they are not able to sustain this particular avalanche or this particular stress. Of course, they will go under or their valuation will change. But broadly, all the blue chips, all the strong companies, their earnings power is not going to change, and hence I don't think the underlying value changes. What is changing is the price, and right now the crisis is that of not a value change. It is a crisis of price change, and in the short term, these price changes can be quite crazy. I mean, these markets are all wired up, and world over prices are collapsing. You look at the Dow future and decide what should be the level of the markets here. So I mean, it's a very different world and very different way of looking at value or price in the short term. I don't think values have changed so much, and it is going to change so much in the months to come.
Now, Mr. Agrawal, before the crisis happened, we were staring at a very polarized market. 15-20 stocks were going higher, rest of the market was not going anywhere. The valuation difference between a Bajaj Finance and a Edelweiss had become extremely high, and that's largely because of growth and liquidity. So what happens now? Do you think some of these polarized stocks which were going up because of global flows and local flows now will start coming down, and that's where the crushing fall will be even more?
See, right now this is, I think, 18th day. Foreigners have been selling almost $500 million every day, so that pressure is continuously there. And I mean, all the foreigners, all the institutions they own, all the bluest of blue chips, all the growth companies are owned by them, and hence selling is going to come in the growth companies only. And growth companies, see, as you said in your beginning, when the selling comes and there is not enough buyer, the floor falls through. I mean, there is no buyer at 3,000 rupees, there is no buyer at 2,500 rupees. So what do? How do you create a buyer? So the biggest challenge is it is not allowed. It is carrying away the buyers. I mean, it's not that there is no purchasing power in the system. There is a purchasing power in the system. But today the fear of moving out or coming out and buying is becoming very difficult, because anybody who did bottom fishing at 9,000 Nifty, they are kind of they are scared at 8,500, and now index is even lower. So so the fear is becoming total, and hence anybody wants to sell. And another problem globally is the ETF. Now in ETF, global ETFs, or whether it is emerging market or MSCI index, when the buyer wants to sell, say, $10 billion or $20 billion, there is no option of anybody but to press the button. And we have seen in our dealing rooms that the sellers have orders to finish off somehow or other during the day, irrespective of the price. So they are not looking at the price at which they are selling. They also bought without looking at the price. the world has changed in a way. In America, incremental, all the subscriptions are to the passive, and now I think all the sales must also be coming from passive. Now, when the passive sells, when the passive buys, they don't look at the price. When the passive sells, they don't look at the price. Hence, if you see the chart formation, I mean, all the technical guys, they say they've never seen a drop without correction, because my sense is the ETF guys are selling without looking at the price, and so I mean it is uncharted, and we have to face it. We'll take all the knock on yourself. And my sense is, if you press the spring so much, I think it will also come back at double the speed. But when that comeback will happen, nobody knows.
Okay, Mr. Agrawal, since you are a practitioner of value investing, where is value in this market? And imagine if some client calls up and says, Mr. Agrawal, this is the moment I've been waiting for. I want to buy India. Here's your blank check. Please feel free to invest. How will you invest? Will you invest right now, or will you invest at lower levels, or will you invest after 6 months?
So, I mean, Nikhil, I mean, to be truthful, I mean, we have been saying that you should start investing 10-20% every day or every week as the market goes down, and so we call it short blast kind of SIP. If you think that this problem is going to go on for 3 to 4 months, I mean, that is a period in which you must complete your investing. The bottoms and tops are made for fools and liars. And don't try to time the market too much. If you are sitting on the sidelines, you got it right. I mean, completely at your price, your stocks are available. So if you want to build your own portfolio, obviously you must know the value. But if you are not competent to understand underlying value of the companies, I would say go and find 2-3 brilliant managers. There are lots of them in India, and start rolling out your 10-20% now, and don't buy it everything in one day. Spread it to whatever 2-3 months. You'll get average of the worst of the sell-off already we are in, and you'll get averages. And I think after 1 year, 1.5 years, you will have a fabulous return out of your courage to move out and face the market when the whole world is fearful. You have to be greedy.
We have not seen any classic sign of capitulation happening in the banking space, which clearly means that capitulation has not spiked up to that extent which is required for a bottom of financial stocks, and this is not the case for India. We believe that outflows are happening and massive redemptions are seeing in globally financially, because that's the one sector which will be first impacted if something goes wrong in the global economy. So I think from last time also I mentioned that we need to avoid financial from these levels. These are grossly overowned stocks, everybody owns it. And so is the case with, I also believe, with also on the Reliance side, we were one of the most hated stock in 2019, and then gradually a lot of funds bought these names. So I'm given the background of crude volatility and given the uncertainty which is happening, I like to avoid even that also. So slightly more cautious in these names, because I don't think worst is still over in these names, where we continues to remain positive, which we talked about, like pharma or utilities company, and up to a certain extent consumption names. So these are the three areas which gives us comfort to build our portfolio or switch from the existing names. This situation, what we have seen in last 10 days, is much worse than what we have seen in 2008. So obviously something has changed, and it is better to recognize that change much earlier than be late from a longer term perspective. So I would like to change that opinion. Definitely we were talking about a wall expansion phase, but this sort of pace even I have not visualized, and that's the reason what we thought it could be a very gradual topping process and people will start sucking inside because the revolves remain high. But this sort of move has disturbed everybody, and now obviously most of the portfolio globally, people are sitting on huge M2M losses, okay, and obviously the mindset changes when you're running a huge portfolio losses, okay, the mindset changes. You like to see when I like to cut down my, whenever I get an opportunity, I will prune my exposure. So when bull market doesn't happen with that. So if you are typically in the bull market, then people tend to have a positive M2M. Today we are sitting on massive negative M2M, which will lead to build pressure on every rally. That's why I'm saying now the call has to be sell on rally rather than buying on dips. And sector rotation will be very, very key.
Okay, well, Raamdeo Agrawal does believe that you should still continue nibbling into the equity market. So for all the guys doing SIPs, continue with your SIPs. We will take a very short break right here on the show, but when we return, we are going to be talking about how loans may get cheaper, how you could now procure a personal loan for much cheaper. Why is that? Well, we'll talk about that with Kunal Verma, founder and Chief Business Officer of MoneyTap. Stay tuned.